Hi everybody, this is Roberta Eastman from Home Buyers Inventory, and today we wanted to talk to you about home loan programs and which is right for you. We have had the pleasure of having 3 of our tenant buyers execute their options on their homes this year. And we have been able to help them look at what home loan program the banks are offering them and helping them share which one's right for you. So we wanted to share the information with you that we have talked to them about so that you would have that same information. And again, if you can buy a home through Home Buyers Inventory, through our rent-to-own program, and work your way towards the traditional banking that you would need in a couple of years, then please visit us on our website at www.homebuyersinventory.com. But let's talk about some of the home loan programs and things that you can consider to determine which one is right for you. So you found that dream home. Now, which one of the loan programs is right for you to have? There's no simple answer to the question. Home loan programs need to be studied to choose which one is best. And it all comes down to your individual family preferences and your financial circumstances. Some factors to consider when choosing from the different home loan programs is your current financial situation. Do you expect this situation to change? How comfortable are you with a changing mortgage payment? So here's differences between 2 types of mortgage. A fixed rate mortgage can save you thousands in interest over the period of the loan, but it will also give you higher monthly mortgage rates. As to where an adjustable rate will start you out with lower monthly payments, but you could face higher monthly payments if the rates change. Now, do be very careful about adjustable rates because that's how everybody got into trouble back in 2008, 2009. They got these low monthly payments, and then 5, 6, 7, 10 years later, their rate adjusted. So it went from 2% up to 11%. Then people couldn't afford the payments and then they lost their homes. That's how we ended up in the foreclosure. So do be careful that you completely understand adjustable rates. It's not that they are a bad thing, but you do want to look at how often can they change the rate on you, and is there a cap? Can they not go past, 7, 8, 9, 10%, whatever that is, make sure you understand the terms of an adjustable rate. So looking at those 2, fixed rate or adjustable, you've decided which type of loan is best for you. Now you need to choose which of the more popular home loan programs is the best one for you. You see, there are many types of programs available, all with different types of loans within the program. You have conventional loans. Some of these are also known as government-sponsored entities, GSEs. They can be used to purchase or to refinance single-family or fourplex homes with a first or a second mortgage. Now, there is a difference in the banking industry if you're purchasing a single-family home up to an apartment complex that has 4 apartments in it, and then once you get to 5 apartments in an apartment complex, it's considered commercial. So that's kind of where the line splits between personal property or residential property and commercial property. Once you get to 5, then it turns into commercial. There are limits on that type of loan that are adjusted annually and, if needed, based on the national average of new homes. So that's how they figure out, well, how do we adjust annually and what the limits are? They do it based upon the national average of new homes. You would need to check what the current year's limits are for an accurate amount if you were to choose this type of home loan program. And then you've got FHA loans. And these programs, they help to get into a home with a lower down payment. Now, they may only require 3 or 3.5% down, and versus the conventional can be 10, 15, or 20. But there is a huge caveat and a huge expense monthly over the term of the loan that comes with putting a lower down payment. But again, if it's the only way you can get into a home, most of the loans that are given out nowadays are FHA loans. And if that's the loan program you have to use or the loan type, then by all means, use it to get into the home. But let's talk about where they make up the difference, right, between the low down payment and the monthly payment. So an FHA loan requires something called PMI, private mortgage insurance. Now, this insurance is for the banks. It is not for you, even though you pay it. And what it does, it is protecting a mortgage company from default. They encourage companies to make loans to families that may meet a lower credit guideline, and that is the FHA loan. But it has and comes with this PMI insurance that can add anywhere between $150 to $300 a month to your payment, your mortgage payment. But there are trade-offs even to that. So, some of the highlights of the FHA loans, they have lower down payments. The home down payment can be as low as 3% versus the normal, like I said, 10, 15, 20% required on a conventional loan. Closing costs of up to 2 or 3%, depending on the bank of the home value, can be financed. This reduces the upfront money needed, and it also depends on the FHA loan that you're going for as well. There is a cap that FHA puts on how much can be refinanced, how much can be a gift, etc. The FHA also imposes limits on the fees from the mortgage company, such as the loan origination fee cannot be more than 1% of the amount of the mortgage. And then you have VA loans. They're available to military veterans who served on active duty and were discharged under conditions other than dishonorable. So there are eligibility requirements for a VA loan. If you think you may be eligible, contact your local or state Veterans Administration representative. The biggest factor in a VA loan is that no down payment is required in most cases. There are no mortgage insurance payments needed, and closing costs to the buyer are also limited. But again, there's another side to the VA loan. A lot of sellers won't even look at a VA loan or somebody who's making an offer because VA requires the seller to do so much work. Like that house cannot have anything that's needed to be done in order for the loan to close. So a lot of sellers just don't want to deal with VA loans, even though you deserve the benefit. We, on the other hand, we encourage anybody to get the best loan for their situation. You can negotiate rates with the lender, and you then have a choice of payment plans with up to a 30-year loan. The last loan program we'll mention is called a sub-loan or subprime loan. Now, sometimes this is a loan for people with poor credit who would not qualify for a conventional loan, VA, or FHA guaranteed loan. But again, do please be very careful of a subprime loan, because that was one of the ways that, again, people got into trouble in 2008, 2009, when we had the house crash. It was these subprime loans that were being written, and people just couldn't afford it. And they had adjustable rates, and it ended up causing all of these short sales and foreclosures, etc. Make sure the loan you're getting is one that you can afford. A subprime normally will require a higher down payment and have a larger interest rate. And this is because of the risk involved to the mortgage company. And the loan should normally be considered for a limited amount of time, such as 2 to 4 years. It's a good way to improve your credit situation and then refinance with more favorable terms. But again, if you don't think you're going to be able to refinance, or you're not going to do the work from now until then to get yourself in a position where you can refinance with no issues, then subprime is a loan you should not consider. Not when there are so many other good choices out there. So finding or planning for that new dream house is just the beginning of the journey into your new home. The right answer to the question, which of the home loan programs is for you? It takes research and an honest look at your personal situation. To learn more about mortgage terms, about more banking, mortgage rates, and how your credit ties into you being able to get a loan, visit us over at www.homebuyersinventory.com. Thank you and have a great day.